Today's focus is primarily on something I call the value fiends. So, as you've seen, Tesla stock price has gone from, let's say, the 260s to 195-ish to now back to about 220. So we wanted to kind of review what's going on here and why. We also want to review, you know, I call it a multiple choice challenge for my regular viewers. One of the challenges I'm having is the fact that we actually have a lot of Tesla stock owners who've actually done extremely well. And our trend has been to stay away from just one exclusive group of investors and more focus on a broad range of issues that might be affecting Tesla in general and the stock in specific. So please feel free to share with us things you'd like to see covered because that helps us narrow it in. Um, I think that it's appropriate that we at least have one show a week where our number one goal is to focus on holders of large numbers of shares and tips and tricks for those people, which will be sort of our ending of today's show. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like some better ideas on investing and trading, please join us on Patreon. So I wanted to first start off today with the fact of, wow, I really delayed making comments because, as you recall, the last sort of investing show we did was something I called the sine curve. And basically, the idea was that Tesla seems to have a reverse sine curve activity surrounding earnings. So the bottom of their curve seems to be the day that earnings are announced every quarter right now. And the top of the curve seems to be the exact middle of the quarter, declining all the way into shipments and earnings again. And so I'm sort of expecting a similar situation this time around, but the Cybertruck does have the power, if things go well, to actually shift this a bit and perhaps push the stock up nicely. So before getting to my primary topic, which is I call the value hunters here, I wanted to sort of go through just generally the fact that I did a show prior to earnings where I recommended that you guys consider what's called a straddle. So all you're doing is buying a call, buying a put at the same strike price, and then letting the stock go where it's going to go. Now, that trade in this case, you know, if you have a portfolio, you want to put out maybe 2 to 5% of the value of that portfolio in options. So a straddle would have been nice if you were just trading regularly, but there's a group of our investors that are those that are large holders of the stock of Tesla. And therefore, when you go into earnings and things typically go south, taking the time to maybe throw 2 to 5% of your portfolio's value out there in puts is extremely wise. And here's why. With Tesla, there tends to be two things that are going to happen surrounding earnings. Either A, the stock price is going to go up somewhat, 10, 20, 10-ish plus percent in many cases, or B, it's going to get smashed in that 10, 15% range. And so the beauty of being a large holder is that anytime we are going to hit earnings or even major news, you can buy some puts and sit out there with those puts and say, if the stock falls, you get your money back in the form of the value of the put rising. You're also in a situation where the money you've lost on the stock is regained in increased value of those puts. So this is a classic sort of hedging process and one of the main reasons options were invented in the first place. So I kind of want to avoid getting back into this right now because most of the folks I'm thinking about are along the whole range, but do expect from us to start looking at, hey, what's optimal strategy for those with large portfolios that want to protect their value in the short term, but they're still long-term committed to Tesla. The other thing about it is that when you think about when you're have a large amount of shares, you actually have a whole bunch of options what you do. You can hedge by simply selling shares, waiting until after the wind blows in or out, and then buying back in. But the problem is you get a huge tax bill that way. And if you just use options, your taxes are minimized in terms of strategies you might want to use. So overall, I just wanted to encourage you to try to take time, particularly if your portfolio is above $500,000 in value, and the number of shares you're holding of Tesla is above that. It's a wise move to really get your arms around the whole idea of options and using them to strategically hedge your portfolio. I do have a one-on-one class for this. If you're interested, please let us know, and we'll arrange for you to be able to contact us. I think the best access point is pretty much send us a note on Teslafaninsight on Facebook, and then we can send you an email and get the conversation going. But if you're above $1 million and you ain't got no hedge, that's very poor form, because you know that Tesla is extremely volatile, and it's been so volatile over the last 8 months or so. If you're well hedged, you might have already picked up 100% of the value of your portfolio just in the options and still own your shares, and they're happily sitting there waiting for the value to increase as good news comes off the water. So I want to cover, so the next phase of what I'm doing, I've been looking at the demographics of my show, and I expected that like in the past, most of my viewers would just be in California, but I've been pleasantly surprised to see a lot of my viewers actually in the greater New York area. I'm from Oyster Bay, New York. This is where I grew up, where the house of Teddy Roosevelt is, and I'm happy to see New Yorkers. I'm also happy to see New Yorkers because you guys are part of what I call my value hunters. And here's why I say that. So there's a group of people who are called analysts or de facto analysts, and many of them are concentrated in the greater New York area, Boston, all the financial centers across the world. You all have a problem, and the problem is differentiating yourself relative to competitors analyzing the same stuff that you are. Now, it could be you're a large investor, but it also could be that you're in a large firm and you got to pick up ideas that you might want to chase. And so I've been pleasantly surprised to see a couple of you ask the question based on suggestions I make, how much trading I've done, did I work for a big firm, etc. I have worked at Fidelity and Fisher Investments for a while, so I do have some command of what it looks like from behind your desk rather than from behind mine. So what I wanted to focus on in the value hunting department is that part of your job as an investor, as a Tesla person, etc., is to understand some of the large groups of holders and what their behaviors are. So we all know people like Gordon Johnson, and those guys are really sort of getting paid fees to force the stock price down, and it can be very lucrative. There's this other group that I'm intrigued by that I feel like I'm seeing right now, which is I call it the value hunters. So you notice how the stock price is falling. So there's a number of sort of niches of owners of Tesla stock that were and should have been selling. And the primary reason they're selling was that we were getting news in that they're cutting prices, their revenue was decent. But the problem that was popping up is that lower profit doesn't make most people happy. Question, why is that? Very simple reason. The stock price of most companies is driven by multiplying what the earnings are times the growth rate. And that's how you get the stock price. So what happens if the earnings are declining based on cutting prices? Answer, stock price goes down. Now, I feel like there are a couple of things that play in the minds of value hunters here. Number one is that CapEx, Tesla's talking about $9 billion worth of CapEx for this year. And he's investing in the cybertruck development and other new developments like building out the new semi-factory and finishing off the Roadster. So what we have going on right now is that somebody is investing to grow, and the investing is using to grow is cutting into earnings. And so it's bad you don't have the higher earnings, but it's good you're going to have more growth with earnings attached to that. So there are certain people like the large investors that can think longer term than what did the last quarter do or what's the next quarter going to do and kind of push that out. Now, there's a challenge that's going on in the stock market right now, which is if you're a hedge fund and can move in milliseconds after announcement of earnings, you have an advantage over the large holders. And so the large holders have to put their money to work in a different way than other investors might. And so what that means then is that, guess what? You're buying when other people are selling. And based on Warren Buffett's process, you could be selling when everybody else is buying because the fundamentals that you're looking at aren't that great. So you know, my shows don't tend to go that long, but I really want to cover more today than less. So there's a thing that's going on. I just finished having sort of an argue. I have a few investing friends, and we have these interesting arguments. So one of the arguments that's happening right now that I'm trying to win, but they do have good points, is what can we expect for Tesla going forward, and whether or not, frankly, it's going to be positive, mediocre, or negative. The answer that I'm coming up with is that there's a secret weapon that Tesla is about to start rolling out. And I'll further get you into the argument. Pretty much the argument right now is, should Tesla do an AMD division, A? Should Tesla do a luxury division the way Toyota has Lexus, or not? Now, one of the things that I keep saying to myself, because we see it a lot, is there's a feeling that Elon hates rich people. And I just think that's a weird paradox because he's really rich. So what I mean by that is that there are certain people who are wealthy and they want and are willing to pay for services not that other people don't get because they have the money and they're willing to use it to get better service. And that's what the luxury divisions of all the car makers are about. And Elon wants everybody to go to the same place. And so I think this is part of the reason why Tesla is somewhat giving up share. Now, as you know, something just happened. We've talked about this before, but I'll repeat it again. What Apple used to do in the old days of 10 or 15 years ago is that there are a number of people who would develop software products that would enhance what Apple products did. And all Apple did was go around, find the best new software products that helped users be more efficient with their machines, and they simply incorporated those attributes into the operating system, pretty much wiping out those people who created those new products. One of them that comes to mind is Quick Keys, but it just gave you fast ways to move around your machine efficiently, and got wiped out by Apple's update. So, as you know, Apple's coming out with what are called wraps. They have evidently 8 different colors where you can wrap the vehicle in, and now you have a different color than the standard colors offered by Tesla. I think that's a good move, and I think this is the beginning of something big. Now, I'll just remind you of something regarding the AMG or the luxury division that I'm recommending, and that is that when you look at an airplane, please note, the first class seats represent 5% of the seats in the plane, but they represent 35% of the profit. So there's a group of folks that will take up not that many units, but actually boost Tesla profitability nicely. And Elon's thing is that right now he's going to boost sales by increasing or decreasing prices by cutting them. But, the segment of the market that wants better service, maybe new colors and other features, they don't want to hear that. In fact, there's a place called Greenwich, Connecticut, very wealthy enclave near New York City, where there's so many wealthy Wall Streeters buying Teslas that they got sick of seeing the same cars running around their neighborhoods, and they just get sick of seeing the same things. So they're buying competitors, not because they don't like Tesla, just because they can't differentiate their vehicles from other rich people. So come on, Elon, we need an AMG division. We need AMG is a division of Daimler-Benz in their vehicle side, and they basically have a car tuning business where they basically turn a Mercedes into a race car. So it looks like a Mercedes when you see it, but once you start driving it, you find out that that car is a beast. So there's all kinds of things missing from Teslas for those who want to race their cars by default, like roll cages, for example, um, enhancements that don't, that give you more power and speed, and maybe at the sacrifice of range. So there's all this tuning. What I was told about this is Tesla hates leading the charge on this. They prefer somebody else develop the business. While they're doing well, all of a sudden Tesla goes and buys them. It just becomes a division of Tesla. It's possible that will occur, but I wanted to encourage you to look at some of the videos in Southern Cal of all the cool things that have been done to Teslas by their owners. The biggest thing that comes to mind is gull wings on the front of S's and Model 3s, where the wing bends up in the air like a Ferrari or a Lamborghini or something like that. And I think it looks cool. It's very differentiated, and they'll wrap it in other exotic colors. So if you like your Tesla and you're kind of bored with color, overall internal accoutrements and speed, drop us a note in the question area, because there's a place called Southern California, and we have some of the best tuner shops in the world. So you can ship your car down there. When that car comes, I wouldn't even let it come back. I would ship the car there, fly in and take it on the road once it's been tuned up. And I think you'll be really impressed with or all the looks that, differentiation you would get, and all the performance. Now, for those of you who are on X or Twitter, please, if there are things that you're not seeing in Teslas that you'd like to see, I would send Elon a note, because they need ideas on what it is they should add to their vehicle. Now, you got to pay money for this. A usual job where they wrap it in another color, plastic, you know, that usual number is 2 to 4K. Tesla's wrap is charging between 5 and 8K, and as of now, the new wrap option for Tesla is only going to be available in 2 different shops in Southern California, or 2 different Tesla locations. And because a lot of those places are backed up already, I'm having a hard time seeing how many people are going to get it. But adding that revenue to Tesla across the globe, I think, would make a difference in all the numbers. So come on now, Tesla. We need a performance division, and people will pay more for that. We also need a super luxury division, because people will pay for that 400 miles if they want an inordinately large battery pack. Yes, it weighs more, but there are a lot of people who don't want to chase where they can find range enhancement, batteries. They'd rather just do it in-house. So overall, what I'm getting at is just the fact that Tesla, Elon are very focused on price rather than quality of service to those customers. And I think that if Tesla makes a move in this direction, the unit count of cars won't be that much greater, but the per vehicle profit will actually go up, which would be awesome. So, this is a suggestion I'm making. I would like to see other people tweeting that at Elon, because the more people that ask about it, that's how we ended up with the wraps to begin with, and soon we'll expand, how and what's available from Tesla based on requests made by folks willing to spend hard-earned dollars for that. So overall, what I wanted to point out today, as you just heard, is that there's a group of value investors, and right now they're they're moving with very large dollars back into Tesla when others are leaving, and those value investors are pushing the stock price up nicely. Could they get blown out? Absolutely, with the stock falling and Elon doing something wild. But I really think the arrival of the Cybertruck, as predicted, is causing us to start the trend upward and back upward once again, and that's really exciting. The challenge has been, why shouldn't investors just do an index fund? Because you value guys don't have a clue on how to invest for value in this market. Well, guess what? These are the people that are now putting money to work, and the goal being to deliver better returns than you can just get from an index, and it justifies their existence and the work that they're doing, and why investors should have confidence in them and put money into those organizations. At any rate, we definitely look forward to your comments on all of this. I wanted to just remind you move over to our health tips for today, and just remind you on the 15-minute a day walk plan first thing in the morning, and then one more in the evening would be your regular workout, or even another walk plan if you really want to cut some calories heading into the winter months, particularly around the holidays. Those extra 15 to 20 minutes a day in the morning and in the evening walks will really help you with fitness, etc. We also have a bunch of tips, if you look below, on health tips from different doctors on recommendations they've made to us. At any rate, once again, thanks again for joining us. We look forward to your comments on our show. Please join us on Patreon. Please like and subscribe. Tschüss, au revoir, le hitro, khoda hafez, draziche, ni hao ma, kambanwa, namaste. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.